huge news. Silver just set a high that is a high for the last 13 years, 11 months, and 10 days. But by a couple of other measures, it has set record highs. So this is monthly data, and we've done a breakout. We are now at the highest close in history monthly. If we go to annual data, a huge breakout annually. We are now at the highest close on both the other one wasn't monthly, it was quarterly. I'm sorry. Quarterly, highest close in the last 2,500 years. Monthly, highest close in the last 2,500 years. And you can see this giant cup and handle, and we are destined for triple-digit silver, and it's probably mid-triple digits.
For over 2 decades, silver investors have waited patiently for the kind of breakout now unfolding before our eyes. The latest data shows silver hitting levels not seen in nearly 14 years, but by some measures, the metal has already set records. On a quarterly closing basis, silver has reached its highest point in history, and on annual charts, it has confirmed another breakout, pointing toward far higher prices ahead. What makes this moment unique is the scale of the technical pattern, a giant cup and handle formation stretching back more than 4 decades. When these patterns resolve, history shows that 8 out of 10 times, they break decisively to the upside. Mike Maloney, a longtime analyst of monetary history and precious metals, explains that this setup could mean not just new highs above $50, but a trajectory toward triple-digit silver prices. With intraday prices already brushing $40, resistance levels are thin. The small pockets of past trading where investors bought higher are unlikely to become sellers now, reducing pressure on the market as momentum builds. Behind the charts lies a structural problem. The global silver market is effectively running on a fractional reserve system, with far more claims than deliverable supply. Rising deliveries and shrinking inventories on the exchanges hint at stress that could accelerate once silver clears key psychological barriers. For Maloney, this isn't just another rally. It's the culmination of decades of suppressed value finally breaking free. If you found this analysis helpful, be sure to like this video, subscribe for more insights, and share your thoughts in the comments below.
When it comes to silver deliveries, these are the contracts that are being delivered. Each one is 5,000 ounces, I believe. So the number of contracts. This is what things normally looked like. And then we had the COVID period where there were a lot of contracts being delivered. And I want to see what this looks like next month, because we're going to be seeing an enormous spike here, I believe. And I think that's just going to continue and continue for quite some time. So as far as the commodities exchange goes, we already know that they run a very lean operation with basically fractional reserve. So all of the silver that has been, I was tracking this earlier in the year, all of the silver and gold flows around the world. Suddenly, this is coming back to haunt them again. There's going to be more withdrawals than there is supply coming in. And when you're running a fractional reserve scheme, you can get buried. So sorry, we've experienced force majeure. Here's some fiat instead. So let's take a look at some of the charts here. Silver reached an intraday high, just 3 cents, 3 pennies below $40 today. This is Friday night, August 29th. You can hear all of the little coqui frogs in the background here. I've been assembling this ever since silver hit its high. I've been assembling this video to go together. But what you can see here, the close was $39.74. The intraday high was $39.97. And so this is a look at the entire bull market of this century. And so now we just have this little area to surpass as far as as far as technical resistance. This really isn't fundamental resistance because there is so little trading that went on there. Anybody that did buy and is still holding isn't going to let go of their silver. They're not sellers. So let's zoom up on some of it. Here is the today's close. And like I said, The intraday was 39.97, and this is 2011. And the closest day to that, there's this one day here. These are candlesticks. So a thin tail like this is intraday trading. It's not the close. So sometime during the day, 13 years, 11 months, and 10 days ago, silver traded above today's price. But if you look at the number of closes where the fat part of the candle is, the fat part intraday, openings, closes, not part of the intraday trading. What you see here is that, this space is 1 month. So there's like a month's worth of trading, but you got to deduct the stuff that's below it. So this is a little over 1 month. This, when you add it together, the stuff that's above the line is only a couple of weeks, and this is a little less than a month. So you might have 2.5 months left of trading where people bought at higher prices. Maybe one or two of them is dumb enough to say, oh, well, now I'm back up to even, so I'll sell my silver when it finally gets to the price where they bought in these areas. Now, let's take a look. This is something very interesting. So this 24, 25, so this is a quarterly chart, and what you see here is we just did a breakout on the close. We are above any of the closes back in 2011. Very interesting. I'm going to show you this in a couple of different formats so that you really get what is going on here, because this is huge. I have been waiting I first started buying silver in April of 23. April of 23. So I'm going to go back to that long-term chart. I'm talking about down here, below $5. I believe it was $4.30 when I first started buying silver. So I have been waiting for, 22 years. That's why I'm so excited about all of these developments that are happening right now. So if we go to an annual chart, we've done another breakout. This is the close, and this is just intra-year trading during 2011. And so we have done another breakout, but I'm going to go deeper on that. These are candlesticks. If I go to just a solid line, that data is based on the close only, so you don't get the noise. Okay, so these are candlesticks again, but today we equaled not the close, but the open of 1980. This is 1979. Each one of these is a fiscal year going back from, this is August 29th, so this is August 29th of last year is the close of this year, and so on and so forth. So they're fiscal years. So this high here, this is 1980, but this is the close way down here at $12.50. This is the hollow body candles are up candles where the open is at the bottom and the close is at the top. The solid candles, the open is at the top and the close is at the bottom. You can see the giant cup and handle that I identified, it was a year or more ago now, a couple years ago. We were making a cup and handle here, and we did it in gold, and I was tracking that, and everybody was all excited. But nobody, it was a while before I took a look at a 50-year chart, and I went, oh my God, we are developing the handle of a cup and handle formation that has been developing over the past 45 years. And this is suggesting silver in triple digits. And I believe that's where we're going. Now, when you do the solid line, this data is based on the close. So this is monthly data, and we've done a breakout. We are now at the highest close in history monthly. If we go to annual data, a huge breakout annually. We are now at the highest close on both the other one wasn't monthly, it was quarterly. I'm sorry. Quarterly, highest close in the last 2,500 years. Monthly, highest close in the last 2,500 years. And you can see this giant cup and handle. However, Jason McNatt says, that's not a cup and handle, it's a beer stein. And I am going to celebrate when silver breaks that, on a closing basis on stock charts, it says that $49.45 was the high. The intraday high on the Chicago Mercantile Exchange was $52.50. And so once this thing passes $50, and it will, and it's probably going to do it soon, then it's time to kick back and have a beer, because I've been waiting 22 years for this.
For decades, silver was often treated as an afterthought in global reserves, valid for industry, but not worthy of being held in central bank vaults. That has now changed. In a historic shift, central banks are openly moving into silver, with Russia's purchases last year, followed by Saudi Arabia's more recent moves. Combined with the U.S. Department of the Interior's 2025 draft list naming silver a critical mineral, the message is clear. Silver is no longer just an industrial metal. It is regaining its status as a monetary asset. The signals don't end there. Backwardation in silver futures, when spot prices exceed forward contracts, is signaling stress in the supply chain. Add to this the staggering leverage of paper silver, with claims hundreds of times larger than available ounces, and the stage is set for extreme price moves. With industrial demand rising, particularly from the solar sector, and central banks shifting their policy, silver's floor is rising. Let's get back to the interview.
Central banks appear to be remonetizing silver, so let's get into it. First, make gold great again. Big breaking: Saudi central bank buys silver. For half a century, central banks only held gold. Russia broke that trend last year with silver purchases. Few believed, but here it is. Silver is being remonetized. Moving on. On the same day, Hansa Czerny recognized that silver spot above futures is a warning signal. Now, normally we're in something called contango, where people pay a premium for delivery of silver out in the future. When silver today goes above the price of the silver futures contracts, that's backwardation, and that is a rare and important signal. The spot price briefly traded at $39.31, while the September 2025 futures contracts stood lower at $38.99. So this is a very important warning signal, and here's what that looked like on those silver futures. Hansa Czerny again, draft status. Silver has been added for the first time to the 2025 U.S. draft list of critical minerals. And Bob Coleman says the Department of the Interior released draft 2025 list of critical minerals. Guess who's on it? And he published the list here. And yes, if you scroll down, you will see that silver, and this column says, yes, it's a byproduct of mining other metals: zinc, lead, copper, and gold. What happens if there's an economic slowdown or some sort of crisis globally? They slow down all the usage. You don't make as many car batteries. You don't make as much things with lead, and you use a lot less copper to build homes and wiring and all of that. This is where most of the silver comes from. And so just as everybody wants it, just as I predicted in my first book released back in 2008, and I reiterated in my last book released in 2023, that there's going to come a day where everybody wants silver, but nobody is going to be using all of these byproducts, so the supply goes away just as the demand is increasing. Moving on, make gold great. Finally, is officially listed critical mineral on draft 2025 Department of the Interior. Can I now suggest where it fits on their table? And this is great. We've got importance to energy, and we've got supply risk. And silver, out of all of these different minerals that are listed as important or supply risk, silver is actually the most important one. So Make gold great is absolutely spot on with that assessment. And then I want to point out how small the silver market is right now. This is insane. So we've got one Amazon at $2.3 trillion, the value of the company, versus all the silver ever mined throughout history at $2.1 trillion, valued less than just Amazon. Now, we now, with central bank buying, and with companies like Tesla and all of the solar companies and everybody who needs silver starting to realize that they need to lock in these lower prices. Every time silver goes down, there's going to be a big buyer coming in. Silver, I believe, now has a floor under it. Silver demand for solar panels 2023 versus 2030. I want to point this out. Conservative projection. So you had about 16% of global supply going to solar panels, and here you've got 25% is a conservative projection. Now, there's not that much silver in each solar panel, and so $50 silver, $100 silver, it isn't going to raise the cost of each solar panel by that much. But when you get up to $700 silver, they're going to be really trying to conserve on this, or it may even slow down the sale of solar panels. This is from Just Dario, and he says 409 to 1 is the paper to real silver. So you've got, now this is futures, options, swaps, forwards, derivatives, and ETFs. So it's everything. I don't know if it's accurate or not, but this is the information that's going around, and it's great to see all of this going around. Now, I couldn't get this stock chart's performance chart to go back to January 2nd, so it starts on the 3rd. The price action for the year normally starts on the 2nd. But the S&P 500 is up 6.11%. Gold is up 28.77%, and silver is up 31.51%. So there you go. I've shown this in the last few videos, but I just want to quickly run through it again because it pertains to the next couple of frames. So if you take the performance of these different items, their percentage change from January of 1980 until 2022, the Consumer Price Index would put silver at $200 per ounce. If you're comparing it to a single-family median price home, $468. The stock market, $2,178. The 10-year Treasury bond, $1,059. U.S. GDP, the same as real estate, $468. Currency in circulation, $971. M2, $781. And the average of all of these was $921. And I said, I don't think it's going there, but this is a possibility, this range of things. So that 781, maybe that's not too irrational when you see what I've got coming up.
What we are seeing unfold is more than just another commodity rally. It's a structural reset of how the world values silver and gold. For decades, these metals were sidelined by a fiat system that favored paper promises and artificially cheap financing. But with silver now designated a critical mineral, and with central banks quietly shifting into both gold and silver, the tide has clearly turned. Industrial demand, coupled with strategic stockpiling, ensures that this shift will not be a temporary surge, but the beginning of a longer trend. Markets are already signaling stress, with backwardation, supply tightness, and paper leverage ratios that appear increasingly unsustainable. Add to this the geopolitical backdrop of nations seeking independence from the dollar, and it becomes clear why silver and gold are reclaiming their role as the ultimate financial anchors. This isn't simply about price speculation, it's about systemic stability and sovereignty. Ignoring these changes could mean missing one of the most essential wealth transitions in a generation. If you found this breakdown valuable, don't forget to hit the like button, subscribe for more deep dive analysis, and share your thoughts in the comments. Your support keeps this conversation alive.